Well, here we are, March the 18th, and the markets are still trading higher off of Yellen's commentary. The reason the financials are trading higher is that Yellen comes out and says the economies are slowing. So we talked about the trade going in because this market had been run down, favored a buy just because it had been run down in all the markets, and that turned out to be the case when the news was supported for financials. The financials was supported because the economy is softening and weakening, and that's why the financials have been rallying. The E-mini is rallying because the Fed can't raise interest rates because of the weak economy. So we're actually in a position to go and get new highs. Now, I probably took the daily down to save charts. I am going to have to take the F5s down that we put up the other day. Too much information for my CPU. So we came in today on our market. We wanted to buy the 55, 57. We had hoped to sell a 65 area, but we said it might take us 60 or 62 to get off a short. So we traded basically 55 to 60. And we took 2 live trades, and on both of them we made the decision to scratch, make a tick or two. The trades were called before they set up. They were talked through live. They were exited before the market made the move. And in both situations, we were able to, it turned out that I made the right decision. And you don't know when you're in them if you're going to do that or not. I mean, it's just what I'm trying to show you when we go through the various screens is that objectively see what you've got. And if you get to the point where it's just as likely for the market to go either way, scratch the trade, make a tick or two, and wait for the next setup. Good trades happen in a hurry. Big trades happen in a hurry. And you can even see this down here. Now the E-mini right here, we came in, the 50-lot trader was a buyer, period. Right in this area, the 50-lot trader decided to increase their length. Right here was the first little round of profit taking right in here. And they've kind of been holding their own. And we're still trading higher right now. So don't be surprised if we make new contract highs off of this move. And it's not going to be done off of economic strength because the Fed cut their economic forecasts. So the Fed is expecting, they're hoping for growth to come back in the second and third quarter, but they said right now that their economic forecasts are showing a softening economy, softening exports, etc. The only bright spot is the employment numbers, and jobs are going up, and that's really questionable because housing starts and construction has decreased over the last couple of months, and they showed a gain in construction jobs last month of 17,000. So nobody believes those numbers when it comes out of the Bureau of Labor Statistics on where unemployment really is. So anyway, it was a Newsday trade, like we said all day long. Know the news, you had the trade. We thought that the word patience would be dropped, but the Fed would throw the market enough bones that the market would not break. And if it did break, the selling wouldn't get too far because of Fed support for the market. We might get one wave of selling. So, and those assessments were pretty well correct. So what do we usually have after a trend day? Anybody? Give me an answer when you get a chance. Pause day, that is correct. And so tomorrow, wherever the most liquidity is on the opening bell and on the closing bell. So those that are on the wrong side of the market, if they're large institutions, exit on the close. That's where the liquidity is. And so good chance we'll see higher prices until the close. And then get that price spike. And then tomorrow we'll look for a pause day. And my guess is we're looking at an 80 to 90 as support right now, and we will refine that as we get closer. Okay, F1 screen is going to say, look for a place to buy it. And please don't go, well, duh, Charlie. I bet you before you came to this room, when you looked at bar charts, you didn't approach long and short trades off daily bar charts with as much confidence and conviction as you do now. So this one says higher, as will the F2 screen. So here we are. I don't know. Yeah, obviously, profit taking at 2100 it makes some sense. So a sell at 2099, 2099.50, 75 might be the trick. So we break out at 90. Last rotate down was at 83, then 86. So assuming a close here at 97, I'm going to guess we got pretty good support, 80 to 85, and perhaps 90. So we'll make the first buy at 90 plus or minus by 1, and we'll have to adjust this tomorrow, so don't get too excited about it one way or another. Buy 2 at 85. We're going to sell 99 to 01. I like that trade, and then the 2104 to 6 area. But hopefully you guys and gals are getting more confidence that you can have fun doing this. And we're going to try to take 2-3 live trades today. Hopefully I can get some more in the ZB, because up until today or this week, it's actually given us a better risk-reward setups than the E-mini. The E-mini's been just tough to trade this week. And again, your best trades, the trades that you get the most out of, are those where you get out for a scratch when you know it's going to get just about to go against you. And I think you've seen in my trading, and this comes from a lot of tape watching. And part of it's intuitive. You can just, I don't like it. You're out, and you don't worry about it. You just get out, and then most of the time your belly button will be right. That's what I found. That the belly button, my belly button, even when I didn't know jack, so to speak, the intuitive voice was pretty damn good. And what we're trying to do is give you confidence to listen to that inner voice, that intelligence, and start incorporating part of that into your trading. Okay, F1 screen on the note and the bond are going to say buy into weakness, and you got a much better reason for buying into weakness on the note and the bond than you do in the E-mini. Not to say that the E-mini is not going, but this one, these markets are higher because of a weakening economy, not only in the U.S., but around the globe. They're higher because of the situation between Greece and the European Central Bank. They're higher because of the defaults coming in Ukraine. They're higher because our economy is more transparent than anybody else's economies outside of Europe, around the globe. Looking at the F2 screen, again, a very, very strong market. I had written down the close at 21, and I bumped it up to 28.5, the high for the day, and now it's right under 29. So assuming a close right here in a pause day tomorrow, we're going to be selling 31s to 03s. Failure to extend the range. And then 7 to 11. And on the buy side, we broke it out at 20. We got a lot of range here, so we'll make 17 to 21, buy 1. I like that. And the breakout from 12, so 13, 9 to 13, I like that. Tomorrow's news, jobless claims, trade balance, not current account balance, minus 105, minus, they're going to have plus 300. It's going to probably be our new default number. LEI plus 0.2. No one will pay any attention to that. Philly Fed plus 7. They will pay attention to that. So jobless claims, then Philly Fed, that's going to be 1, that's going to be 2. But we expect a pause day. God, we're almost at 129 right now. I mean, this is just, you show why you can't let your losses, this shows why you can't let your losses run. Even in the 10-year, you can get your damn head handed to you these days. And that's a good thing because it gives us the volatility we need to take trades. And the more volatility we have, even moving average crossovers, any one of them you pick will work for you. And that's a good thing. Now, I'm not going to go around championing that, but that's okay. You can hold it against me personally. And the reason I don't like them is they're slow. And I've come from a responsive market background where you have to buy weakness and sell strength. So trade location is very, very important to me. But what markets am I trading the most in front of you? Go with markets. So you got to be flexible. You got to do what you got to do, right? Somebody said that before. Okay, wow, 164. Who'd have thunk? Woo! So failure to take out this 28 to 64 area, I think, is the trade. Day session is over, so those that had to buy on the close that were short for whatever the reason are there. We got a lot of volatility here, so 13 to 9, we'll put that preferred buy. The breakout from 28, so 29 to 01 for buy 2. And we'll put a question mark at 17. But this can be fun if you don't make it such a damn big deal. Well, Charlie, I'll be broke or have to go back and, like anybody's spouse tells them after a year on the screen, you're not fit for regular employment anymore. And they probably have a good point. Who's going to hire somebody that counts ticks? I look at upside and downside volume. Would that be of interest to you? What? At least if you say upside and downside volume, they won't, counting ticks, they might construe you for working for Orkin or someplace like that. And that's not a bad job. I'm just saying that to eliminate confusion in your conversation. So you don't have to get into lengthy explanations. Just tell them you count upside and downside volume. Gives a bean counter new stature, doesn't it? But if we can keep our analysis and our look on the market somewhat objective, and if we can put things into proper context, and if we focus on what really drives the market, which is up or down volume, then you can make this work. But what if I have a loser, Charles? What if you have a loser? God, imagine if every trade you took was right. Now, I'm not saying that you wouldn't be excited about that for a while, but after a while, the euphorium, the bloom might come off the rose, and you'd have somebody else, I want to buy here and sell there, and you go off and do something else. So, 75. Why would 1175 stop the market in gold? Anybody? It is a round number. Remember the buck, 25, then 50, then 25, 75. Somebody's going to take profits. So a fade order at 74.50, 74.70 probably makes sense when you come into that number. We were already above 50 when the news hit. And, Laramie did not say one word about getting out of his gold trade at 57. Why? Because that was his trading target, that was his plan, and he worked his plan. Now, if you're a beginning trader, you're going to go around and whine as, God dang, if I just stayed with that trade, I could have made another $1,500 or whatever it happens to be. And that's not the proper conversation. You're malpracticing yourself when you do that. So Laramie assessed the market, $1,000, not a bad trade. Think about it. And now you want to know why people take profits at $500 and $1,000, etc. Laramie's a prime example. Easy for him to do the math, and it's a hell of a trade when you get right down to it. So again, but everybody does the same thing. We're all wired the same way, and that's the dynamic that we key off of. So don't forget it. These are live, real-time examples in the room. Us mere mortals can do this. Okay, so 75 is resistance. We should expect a pause day. So we have this breakout, 65, 60. So we got probably pretty good support at 60 to 65. And I'm going to guess that we've got pretty good resistance at 75. So sell 1, 73, 75. We'll have to get through London, see if the squeeze continues there. And then our 79 to 81 will be sell 2. So we got a chance for the market to rally when people wake up in London and figure out that they're on the wrong side. And our buy 1 will be, I'd like to get it done a little bit better than 65, but we'll make buy 1 65. We'll make buy 2 60. And that's it for gold. But if you can, if you don't take yourself so damn seriously and you don't make this, I mean, how in the hell could you pull a trigger if it were life or death? Now, in flying an airplane where it really is life or death, you don't have any problem pulling the trigger. But in this game, where it's only money and not necessarily life or death, it's pretty hard. I mean, it's you like the deer in the headlight if you're like most people when you first get started. Okay, now, Chris, refresh me. You put a fade trade out in crude, and I'm not sure my charts are going to be close to yours. And I'm not even sure I can show your charts. But maybe you put a trade right here, a limit sell against that, or something comparable to that, and then you took yourself out when you broke out, took out this low volume number right there. Okay, well, I mean, it's a reasonable idea, and you wouldn't think that crude would rally like this, except for, dollar weakness is going to drive crude, as the euro will. So dollar weakness took crude up. So, I mean, that's a reasonable trade, and it was a reasonable loss. So, I mean, I don't see that I would do anything any wrong. Another place you could have put it was right here. That last rotate up may have saved you a dime. See that G period high right there? That was the last rotate up. I would mark this spot right here. Otherwise, the low volume number is fine. Anyway, but I mean, the idea was fine. And, anytime you do something, and this is a big news event. I mean, Yellen's going to move the markets, and crude would be the one the one that you'd at least expect to be moved, but that wasn't true in this case. So, yes, a resting limit sell against these high volume numbers is the safest place to do it. And on the first correction, you ought to be able to get out at that number. So what happened on the first correction, if we can find that? Okay, you were short, I think, in this area. Actually, you did come back down off of it pretty nicely. So that looks like it was if I have the numbers right here, I think that pretty damn good trading, Chris. So, and the contract least likely affected by the news was going to be crude. So I think that, and so your exit would have been right in this area right here. Or actually, the first would have been right down against the value area high. So, I mean, I don't see how I could get a lot better than that, okay? So, as they would say in East Tennessee, you done good, Chris. Now, listen, the logic was perfect. The way that you handled it was perfect. But sometimes, even with perfect logic, you can have a loser. So, anyway, and that's just the nature of the beast that we deal with. I'm going to lay F1 screen on the 6E to bring some perspective. So we came from 106 to 108, and we've got this low over here in the 108.40 area. We've got this high up here that got stops just above it, but they did not get stops above that. And so right here we are at 108.07. And there might be a little more short covering in London, but this has got to be one of the, when this market starts to sell off this level, I think it's just a great short. Now, why would the euro rally like this? Well, our economy appears to be softening. And the Fed didn't say that they were going to raise interest rates anytime soon. So those that were short on the euro, off the idea that the Fed might be raising interest rates sooner rather than later, had to get out of their positions. So here we are, selling 8.15s to 25s. I like that trade. Then 40 to 50 for sell too. And on the buy side, I really don't like the buy side, but I guess 107.50, I could live with that. And this market has been stopping at 75. So again, I just think the correct long trade is covering a short. And that doesn't mean you can't make money by being long. It just means that's what I'm thinking. Now, I'm not right all the time, but I am consistent. And you're looking for a feed of consistent ideas that doesn't look at one thing one day, another thing the other day, and is all over the map. And I'm not all over the map in what I do. So that can help your trading. Even if I were wrong, pretty soon you'd figure it out, well, if that guy wants to be long, I'm going to be short. And everybody that's ever been a broker had a person, an individual in their books that was always wrong. And, you first start off thinking, well, that guy's just dumb as hell. He's not dumb. What he requires is so much information before he makes the move that the bloom is off the rose. And he's covering all the bases, and he's covering them too well. He requires too much information to make a decision. And so, you first start out, God dang, this guy's dumb. But he's not dumb. He just requires too much information. And that's the way that you have to view things. So 47 and a quarter is sell one, and then 50 to 75 is sell two. And if the dollar is still weak out of London, back it up to the S2 for those that you all play out of London. Had a hell of a move. So 46 and a quarter. And let them get stops beneath that L period low, buy one. And then 45, 50, 45, 75 for buy two. And that's all she wrote, as far as I'm concerned, for March the 18th. 2015. Any quick questions here? I'm going to go stop the recording, so save some time that way. But I'll come back for questions about what happened, how to play the FOMC, and the rest of it. But hopefully we got that covered pretty well today going into it.